Intel just made a $14 billion move, and the stock instantly jumped nearly 9%. But here's the real story. This isn't just a deal. This could be the strongest sign yet that Intel's comeback is real. Intel is back in the spotlight. The stock surged nearly 9% in a single day after a massive announcement, a $14.2 billion buyback of its own chip factory stake in Ireland. But this isn't just a financial move. This is a strategic shift that could redefine Intel's future in the semiconductor industry. So what exactly happened? Why did investors react so strongly? And does this mean Intel is finally turning things around? Let's break it down step by step. Section 1. The big news. Intel has announced that it will buy back a 49% stake in its Fab 34 semiconductor plant in Ireland. This stake was previously sold to Apollo Global Management in 2024 for $11.2 billion. Now, Intel is buying it back for a much higher price, $14.2 billion. That's a huge premium. And the result? Intel regains full ownership of one of its most important manufacturing facilities. Section 2. Why this deal matters. Fab 34 is not just any factory. It's a cutting-edge chip manufacturing facility that produces advanced processors used in AI systems, data centers, and modern computing devices. These chips are built using Intel's latest technologies like Intel 4 and Intel 3 processes. And in today's world, where AI demand is exploding, owning this facility completely is a massive advantage. Section 3. Why Intel sold it in the first place. Here's where the story gets interesting. Back in 2024, Intel was under financial pressure. Instead of taking on more debt or risking its credit rating, the company sold a 49% stake in this plant to Apollo for $11.2 billion. This gave Intel immediate cash, financial flexibility, time to stabilize its business. But it came at a cost, sharing ownership of a critical asset. Section 4. Why Intel is buying it back now. Fast forward to 2026. Intel's financial position has improved. The company now has better balance sheet strength, lower borrowing pressure, and improved business outlook. So instead of sharing profits, Intel wants full control again, and that's exactly what this buyback achieves. According to company executives, this move is expected to boost earnings over time, improve its credit profile, and strengthen long-term profitability. Section 6. How the deal is being funded. Now you might be wondering, where is Intel getting $14.2 billion from? The answer? Existing cash reserves, around $6.5 billion in new debt. This is important because it shows Intel is confident enough to take on new debt, something it avoided earlier. Section 7. Why the stock jumped. The market reaction was immediate. Intel stock jumped around 9%, making it one of the top performers in the market that day. But why? Because investors see this as a strong signal of confidence. Here's what the market is thinking. Intel is financially stronger than before, the company wants full control of key assets, AI-driven demand for chips is increasing, and this move could boost future profits. In simple terms, the market believes Intel is finally getting back on track. Section 8. The AI factor. One of the biggest drivers behind this move is AI. Demand for high-performance chips is exploding, and Intel Fab 34 plays a key role in producing processors for AI workloads, enterprise computing, and next-gen servers. Owning 100% of this facility means Intel keeps all the upside. Section 9. What analysts are saying. Analysts are viewing this move as a sign of a potential turnaround. Some believe this shows improved execution, stronger financial discipline, and growing confidence in Intel's future. The fact that Intel is willing to pay more than what it originally sold the stake for shows how valuable this asset has become. Section 10. Risks you should know. But let's stay realistic. This is not a guaranteed success. There are still risks. Intel is taking on new debt, competition in AI chips is intense, and execution remains critical. And while the deal looks strong on paper, the real results will take time, possibly until 2027 or beyond. Final verdict. So what does this mean? Intel's 9% stock jump is not random. It's a reaction to a bold, strategic decision, a decision that signals confidence, control, and long-term vision. But the real question is, can Intel deliver on this momentum? Because in the stock market, narratives create excitement, but execution creates wealth. So now I want to hear from you. Do you think Intel is making a comeback, or is this just another temporary hype move? Comment below. And if you want real, no-nonsense breakdowns of stocks, investing, and financial freedom, subscribe to Investor Mindset.